What if I told you a profitable debt-free shipping company just posted its second-best quarter in history, and the stock is still trading at a 60% discount to its true value? Stick around because we're breaking down the top 10 takeaways from Imperial Petroleum's Q1 2026 earnings call, and some of these numbers are going to blow your mind. Coming in at number 10, Imperial Petroleum posted record Q1 revenues of $61.7 million, a staggering 92% jump compared to the same quarter last year. Management called it an extremely favorable start to 2026, and that's an understatement. Year-over-year revenue nearly doubling in a single quarter is the kind of performance that turns heads on Wall Street. At number 9, the company's fleet expansion strategy is clearly paying off. The fleet now stands at 21 vessels on the water, with 5 more scheduled for delivery by Q3 2026. A larger fleet means more capacity to capitalize on strong market conditions, and that's exactly what happened this quarter. Number 8 is all about dry bulk strength. Daily net revenue from dry bulk vessels climbed to approximately $16,000 per day in Q1. Even more impressive, the BDI Supramax Index surged 40.3% year-over-year, and the BDI Handysize Index was up 36.7%. The dry bulk market wasn't just holding steady, it was thriving. Number 7 dives into the geopolitical wildcard driving all of this, the Strait of Hormuz. The near closure of this critical waterway following the U.S. Iran-Israel conflict caused massive trade disruptions. Roughly 10% of the world's compliant tanker fleet got stranded in the Middle East in Q1, creating vessel shortages, supply crunches, and oil price spikes. For Imperial Petroleum, that disruption was actually a major tailwind. And that brings us to number 6, the tanker rate surge. At the height of the conflict, Suezmax tanker rates soared to over $250,000 per day, while Mr. Product tankers hit close to $60,000 per day. Compare that to around $47,000 and $26,000 per day a year earlier, and you start to understand why this quarter was so extraordinary. The company's average daily net tanker revenue jumped from $27,000 in Q4 2025 to $43,000 in Q1 2026. Number 5 is one of the most striking slides from the entire presentation, the massive NAV discount. Management calculated that the net asset value per share is approximately $13, while the stock is trading around $5. That's a discount of over 60%. And here's the kicker. The average peer company in the industry trades at only a 20% discount to NAV. Imperial Petroleum is deeply undervalued by any comparable measure. Number 4 is the balance sheet, which is frankly remarkable for a company of this size. Imperial Petroleum is completely debt-free, holding $213 million in cash and cash equivalents as of March 31st, with that figure climbing to approximately $221 million by the call date. The company has capital commitments of around $130 million for upcoming vessel deliveries, money it can comfortably cover from existing cash alone. At number 3, management is putting that cash to work through an active share buyback program. As of May 21st, the company had repurchased 855,769 common shares for approximately $3.8 million. In a market where the stock trades at a steep discount, buybacks are a smart, shareholder-friendly move, and leadership made clear this effort will continue. Number 2 is a headline result. Net income of $28 million for the quarter, with basic earnings per share of 60 cents. That's the second-best quarterly performance in the company's entire history. And here's what makes it even more meaningful. Based on the share price at the time of the call, that single quarter's EPS translates to an earnings yield of more than 12%. One quarter, 12% yield. And the number 1 takeaway, the one that really puts everything in perspective, is the net profit margin. Imperial Petroleum delivered a 45% net income margin in Q1 2026. In an industry known for cyclicality and thin margins, generating nearly half a dollar of profit from every dollar of revenue is exceptional. With a debt-free balance sheet, a growing fleet, and geopolitical conditions that continue to support elevated shipping rates, Imperial Petroleum is firing on all cylinders. So there you have it, 10 reasons why Imperial Petroleum's Q1 2026 earnings call is worth your attention. Whether you're a shipping industry enthusiast or an investor hunting for undervalued opportunities, IMPP is a name worth keeping on your radar. If you found this breakdown helpful, hit that like button and subscribe for more earnings deep dives just like this one.